Yo guys, welcome back to Stock Talk Insider. Today I wanted to talk about Nike stock and I wanted to make a video about the company Nike and everything around it and where I do think that Nike will be in a couple of years. I want to talk about the company earnings and where they are now, and as I said, where I think they will be in a couple of years. Then I also want to talk about some long-term potential besides just the numbers in the stock, but also just in company numbers and in company growth and just some expectations around that. And I also wanted to talk about a little Warren Buffett perspective on Nike, where I also will be giving you my conclusion. I have done a lot of research on Nike, and I just wanted to make a small direct video to you guys. Besides that, I also wanted to show you one little video, and that will be it for today. I wanted to start making a position in Nike, but I have not done it. Why? Because I do think that Nike will be going through some turbulence. Of course, that's short term. I am a long-term investor, so you can say, why do you care about that? Well, I have other positions, and I do think that in the coming 2 years, there are a lot more interesting positions you can start in the market besides Nike. Although Nike is one of the very potential high return profiles you can find on the market right now. As you can see on the chart, since the beginning of they going public, they reached about what was it, $166, and now they are at 76. So there is a lot of room to get back to their all-time high. And Nike is just one of the biggest and most known brands out there in the whole world. Maybe as a clothing brand, it will be the biggest, if not the most popular brand in the world. But there are just some problems at this moment, and Nike is going through a rough time and has a lot of turbulence, but they didn't yet crash. So that is what we will be talking about today. So again, Nike is very down. Also, JP Morgan brought the stock back to, what was it? I do think around $73 as price targets. I do think that we will see it in the video. We will see in a moment. First, I want to talk about Nike, and I want to show you guys my perspective and the script that I brought up and made for this video. So let's get started. Today, let's take a deep dive into Nike's current situation and evaluate whether it's a good time to invest in the stock. Although I currently do not hold a position in Nike, I am interested in establishing one in the future. However, I am waiting for more clarity on the company's direction under new leadership and how its strategies will unfold. Let's explore Nike's performance, future strategies, and stock predictions. So, Nike's current situation. As of December 22, 2024, Nike's stock price stands at $77, a drop of approximately 27% from the beginning of the year. The company has faced significant challenges, including declining sales and shrinking profit margins. However, despite these obstacles, Nike remains one of the most recognized brands in the world. In the Q3 4-yearcast 2024 earnings report, Nike posted $12.4 billion in revenue, a slight increase compared to the same quarter last year. The Nike direct revenue amounts to $5.4 billion, showing a modest increase on a reported and currency neutral basis. However, Nike brand digital sales fell by 3% on reported basis. A wholesale revenue stood at 6.6 billion, marking a 3% increase on both reported and currency neutral basis. Why Nike's stock may face challenges in the short term. Inventory management. Nike has been forced to apply aggressive discounts to clear excess inventory, which may lead to lower margins in the short term. Competitive pressure. Brands like Skechers, Hoka, and On have been gaining market share, intensifying competition for Nike. Reliance on lifestyle footwear. Nike's strong focus on lifestyle footwear has made the brand vulnerable to shifting consumer trends. Strategic changes. The recent strategic. Sorry, guys, I have a big problem with saying the word strategic changes. The recent strategic shift under the leadership of Elliott Hill may lead to short-term uncertainty and stock volatility as investors await the results of these changes. So yeah, Elliott Hill has been at the company for around 32 years and had 19 different kind of positions in the whole of his career at Nike. So yeah, it's an obvious choice to get someone from inside of the Nike company. On Wall Street itself, they don't really know the guy, but Elliott Hill now has his chance to prove himself and prove that Nike is still the best there is. And yeah, that is what I mean. In the short term, there will be some uncertainty. The price will probably go down a bit more, around 5%, I think. I do think it will go down another 5%, and it will be going through that price. And when then Elliott and all of the rest of Nike proves themselves to be one of the best, if not the best company in clothing, then they will make some changes here and there, and they will make them back on track, maybe. So yeah, that's just the one thing that's uncertain at this moment. So yeah, they need to decide if Elliott Hill is indeed a good choice. But yeah, those things always take about 18 months before they really see the difference from before Elliott Hill came on board. Look at PayPal. PayPal also has a new CEO since 1 year and a half or something. And also before that, they were also going through a whole metamorphose and just changing a bit of the business, because they were not on the track they were before, and now they are back on track. They have the points they have to focus on, and they're going for that. And Nike also, it is at this moment, you can maybe say it's a bit of a mess, but it's not that big of a mess. It just needs a fresh breather and someone that understands the company, like normally Elliott Hill will understand the company and make new changes and new nice drops for Nike. So yeah, that's just something that will make a little volatility in the short term. But I do think if Elliott Hill makes a great job, the stock price will follow fast after it, because it's just one of the big names in the stock market, and actually one of the big company names in the world. So it has a lot of potential for the long term. But this short term is one of the big key factors for Nike to go even lower, or it should go higher. So yeah, that's one thing to keep in mind, that there is still uncertainty in the short term, and with that I mean about half year, a year, maybe even 18 months. That's for me is the short term. But again, there is a lot of potential in the stock. I will be on the sidelines looking at the stock and just analyzing everything that happens, but I just want to wait a little while longer before I make a position, because I am interested, but just not enough to just already make a position. I want to know more. I want to see more, because at this moment we just have the problems that there are the problems, and we are just waiting for Elliott Hill to actually make the change. So I don't want to buy between in them. I want to see some change before I buy and before I see the opportunity. Just because before now, I see the opportunity, but I have nothing to back it on. So if that makes clear, that's a bit what I am waiting for. So the long-term potential for Nike. Despite these challenges, Nike still holds significant long-term potential. Brand strength. Nike remains one of the most recognizable brands globally, with a loyal customer base and leadership in both sports and lifestyle products. Digital growth. Nike's focus on digital transformation and direct-to-consumer sales continues to gain momentum. Digital sales have risen substantially in recent years, and this shift will drive higher profit margins and more control over customer data. Sustainability. Nike's Move to Zero initiative aims for zero carbon emissions and zero waste, addressing the growing demand for sustainable and eco-friendly products, positioning Nike as a future-ready company. Emerging markets. With a strong presence in China and India, Nike has ample room to grow in these rapidly expanding markets where sportswear is still in its early stages of development. The financial outlook and projections. Nike Q3 FY 2024 results exceeded analyst expectations, with revenue slightly above estimates and at 12.4 billion and earnings per share, other called EPS, coming in 8.8% above expectations for the full FY 2024. Nike projects revenue growth of around 1%, with a modest increase in the fourth quarter and a projected gross margin expansion of 120 basis points, other called 0.12%. Stock price and expectations. Given the current market conditions and leadership changes under Elliott Hill, Nike stock may face continued short-term volatility. As said before, analysts have mixed views, with some optimistic about a potential recovery, while others see considerable challenges ahead. Should you buy Nike stock now? Whether or not to invest depends on your own investment goals. This is not any advice I give you, it's just my opinion. I want to write it down. So, long-term investors, Nike presents significant upside potential, especially if the company's digital and sustainability strategies succeed. Short-term investors, it might be wise to wait for clearer signs of recovery in the coming quarters, as the stock could continue to experience volatility. Then there is the part of Warren Buffett's perspective on Nike. I have seen I don't know the name I don't know the word in English to describe it. Oh, I know. A conference of Warren Buffett was something that I watched the other day on YouTube, and it said the following. It's also worth noting that Warren Buffett, one of the world's most successful investors, has historically avoided investing in companies like Nike. The reason for this is that Nike operates in an industry that can be harder to predict due to consumer trends and constant need for innovation. Buffett typically prefers business with a more predictable earnings, which is why he has stayed away from Nike in favor of companies like Coca-Cola and Apple. Conclusion. Nike remains a powerful brand in the sportswear industry, but its stock may face challenges in the short term. As of December 22, 2024, the stock price stands at $77, with analysts projecting that it could reach 160 to 170 share by the end of 2025 and $180 to $200 per share by 2026. For long-term investors, Nike offers excellent upside potential, especially if its digital and sustainability strategies are successful. For short-term investors, it may be prudent to wait for more signs of recovery in the upcoming quarters. I currently hold no position in Nike, but I'm watching closely to see how their strategies unfold. Given the market volatility, I'll decide if my future position makes sense once more clarity emerges. So that's what I wrote down for Nike, and that was my things that I searched and that I put it in one little script for you guys. I hope you had any profit in knowledge about it, from it. And then I just wanted to show you guys one little video that I will show you guys right now. And then this will be it for today. So, Nike's problem is larger than marketing, says JP Morgan's Matt Boss.
It's getting a boost today with the broader market. Joining me now, Post 9, is JP Morgan's Matthew Boss with his top pick in the retail space as we head into the holiday season. It's good to see you. Welcome back.
Great to be back.
All right, let's go through the list here. I want to start with the dud, if you will, Nike. We've talked many, many times.
Yep.
I know that there's a reboot going on here. What do you attribute to the stock action? The price action in that stock today was rather interesting, right? Wasn't it up and then it was down? Why?
Yeah, so 2Q results were in line with expectations. That created immediately on the print a relief rally post-close. Then as the call progressed, you heard the storyline of that this is going to take longer and that the divot is going to be deeper. So the actions are just beginning in terms of clearing the inventory, which is heavy right now in both North America and Europe, as well as some of the actions to get back to a pull market. So it's going to be 3Q of next year, basically one full year before Nike is prepared to actually be able to have inventory in the market with the inventory clean. And then from there, you need to scale the storytelling and the digital around the marketing, and that's going to create earnings that, on our numbers, are now 50% below the street for next year.
What do you think the main issue is? Like, what has prevented this brand from resonating with people now the way that some of these upstarts are doing? I heard another analyst suggest, could you name a current Nike commercial, big marketing campaign? I'm thinking about, some of the biggest athletes on earth over the years who were all Nike athletes, but now who have either retired and then, moved on to other brands. Like Steph Curry is still the thing in the NBA, but he's not a Nike guy.
No, he's an Under Armour
LeBron's
guy.
In the, November of his career in the NBA. Serena doesn't play anymore. Tiger is in the December of his career. Is that a problem?
I actually think it's larger. I think there's two structural changes that have happened. The first is, if you think about historically, Nike was a marketing company, and then it was innovation-led, as they have the ability with size and scale to spend more than anybody else out there. What changed is two things: e-commerce and the advent and more of the growth from global brands coming online. It lowered the barriers to entry. So you don't have to be the largest. It's not necessarily that you can catch Jordan and you have a halo effect. It's now the social influencers. And then secondarily, as you think about the barriers to entry coming down, I would say in 20 years covering this space, I've never had a time when you hear about New Balance with a turnaround, Hoka, On, you have Arc'teryx, Salomon in the outdoor space. Just the sheer number of competitors, it's not just Adidas relative to Nike like it was in 2014. That's why I think this is going to be longer, and this is going to take more effort to get back on stable footing. Do I think they can get back to growing an industry? Absolutely. But I think it's more 2 to 3 years out, not 1 to 2. And that, I think, is what the market was potentially wrong on.
Well, growing an industry is one thing. Growing above to justify a higher multiple
That's
where
right.
the stock used to be.
That's right.
That's the problem.
That's precisely it. So on my numbers, stock's trading at nearly 40 times earnings. And that is anticipating 400 to 500 basis points of margin recapture, and to your point, getting back to the Nike growth profile that was of old. That was where it traded 27 to 30 times, and obviously the market is anticipating a turnaround dynamic playing out under new leadership. And look, I think culturally, I think some of the people that they brought in every change that Elliott laid out last night, I do think are the right changes to make here. It's just that it does not happen overnight, and he was pretty clear about that.
When you talk about barriers to entry being easier, you're describing a situation where the goalposts have moved.
Absolutely.
But once they move, they don't move back?
No. And the other thing that changed is if you think about the percentage of what they call lifestyle. I think of lifestyle, it brings in a fashion element. That creates more volatility. And to your point, back to multiple, that's a different profile. Nearly 50% of the business is now lifestyle. They talk about more people wear a basketball shoe with jeans than wear it on the court today. That's a material change from Nike of old that was much more performance-led and could catch the best athletes because they were the largest and the biggest. And it's not necessarily the same today.
Yours truly, by the way, no foot shots. So who's getting it right? Who's getting it most right?
Yeah, so I think you want global brands that have structurally stuck to their correct dynamics around marketing and flywheel investing. So I would put Tapestry, which is led by the Coach brand, in that camp. I think Birkenstock, where the demand for the product is materially higher than the supply. I would put Ralph Lauren in this camp. That's a multi-year. It took them 5 years in terms of some of the structural actions to pull the product back out of the wrong channels of distribution and back into the correct and go forward. And you and I have talked about this one, but I think Lulu is much more performance-led in terms of relative to some of this lifestyle product. And that's why I think they went through this dynamic where they didn't have the newness, but now they're coming back on the other side of it.
Oh, so they've made the turn.
Absolutely.
Lulu's made the turn.
You've stabilized, and now in the front half of 25, that's where the newness and the sizing and getting the growth back in North America. But you never lost the growth in international. You never had the excess inventory, and so you've never had to go through these clearance dynamics.
You still love Ralph?
I think Ralph is compounding from here. So you have a mid-teens margin structure that's moving higher on continued average unit retail expansion. And what I really like is the white space opportunity that's been opened up because luxury prices are now 50% higher off of a much larger base. So I think Ralph fits into the affordable luxury, and they've upscaled their customer.
What's the holiday going to look like?
I think holiday's good. So I think it started out strong. You had the break of the colder weather in November. Then you had the value catalyst with Black Friday. But I think the bigger overlying dynamic here is now that you have a wealth effect. I mean, the numbers are nearly $60 trillion of wealth creation since 2019. So I think high-income consumer, the dollars are there. I think the discretionary dollars are there. The catalyst to spend is there. Low income is where we're more, I would say we're more tepid into next year because you still have the wild cards of what's going to happen with tariffs, how's that going to affect pricing, and inflation remains the biggest headwind to that lower income consumer.
Shorter spending time period have any impact, right? Thanksgiving was so late.
The funny thing is, I actually think all it did is it compressed the lull. So I think people came out for Black Friday. I think that weather coming off of the September and October was the warmest September and October in 30 years. Apparel and footwear did well in November. That's when you do your full price selling. Next thing you know, the calendar turned and it was 2 to 3 weeks until Christmas. And now you have people in the last minute frenzy. And so I think especially for destination type of shops, as I mentioned, a Ralph, a Tapestry on the Coach side, or a Lululemon.
Abercrombie.
And Abercrombie. We were actually just in Columbus yesterday. Look, that's a mispriced security. That is a global brand that's being treated like a specialty retailer, mid-teens margin structure, moving higher, and growing double-digit top line for 4 years straight now.
Well, enjoyed the conversation. It's good to catch up with you again, Matt. Thanks.
Great to be back.
All right, it's Matthew Boss right here at Post 9.